Wall Street, you gotta love Wall Street. Monday, it was massive recessions coming, this yen carry trade, it's all over, it's game over. Tuesday, it was like, maybe not, things might be okay. Yesterday, it was like, I don't know, things might be bad. Thursday, today, oh my gosh, no recession. It's all been canceled. We're looking good, baby. $82,000 up. Isn't it fascinating how much Wall Street's opinion can change by day basis? It's incredible, right? Obviously, massive day out there for so many of my stocks. I mean, Meta, $35,000 up today. This is just in the public count. Palantir, $16,000 up. Tesla, $12,000. Elf, $6,000. PayPal's almost $5,000. Amazon, $3,000. Nvidia, $2,000. Cheesecake Factory, $1,800. It's incredible. Shopify, another stock I own. I don't own this one, the public account, but I own another portfolios. 25% plus move now in the past 5 days. 7% here today. Yesterday was like an 18% move for the stock. You do have a few stocks out there crashing, though. I will say that. Monster is one of those that crashed here today. That one was down over 11%. And then you had Dutch Bros down about 20% today. Two drink companies, just different drink companies, right? Man, those stocks absolutely got pounded. Celsius Beverage, I'm getting closer and closer to buying the stock. It's now down 59% in the past 12 weeks. Absolutely historic fall. And a lot of these drink-related companies, you look at a Starbucks as well, they're just going through some pretty tough times in regards to their business model. Monster, the growth rates I saw in regards to Monster's earnings, that was some of the weakest growth I've ever seen from Monster. I used to be a shareholder of that company about probably over a decade ago now, but man, you know, some rough growth rates out for some of those companies. But today's video, we're really focusing on two stocks, okay? These are two higher risk, but like insane high reward stocks that are looking very, very good. These companies' numbers are coming around very nicely, and we'll speak about the numbers that have come out here after the bell. We'll talk about what's the potential upside for these particular stocks, which there's an immense amount of upside for these particular stocks. And so we're going to get into all that in this video here today. I put this together for you guys about, what was that, 4 or 5 days ago. I think I put that together Sunday night, late Sunday night. 7 things to do when stocks are crashing. It's a really important kind of checklist, workshop, whatever you want to call it, on what you need to do when you are seeing stocks out there crashing. Is unfortunate because Monday a lot of people got wrecked. A lot of retail was out there selling stocks at insanely poor pricing. And, you know, when the VIX was high, like there's all these like correlations I would have told you not to be selling in the morning on Monday morning, but people just were panicking, right? And so make sure you guys get access to that. It's absolutely free. It's pinned comment down there. Before you leave today's video, either pause the video, grab it now, or grab it at the end of this video. But make sure you get that one, okay? Because I'm shouting that out this week, and I want you guys to all have access to that, okay? Alrighty, so the first of these two stocks is the Honest Company. This company's been on a comeback, and the comeback continues, okay? It's up 8% after hours. Don't be surprised if it's up a whole lot more than 8% tomorrow. Here's the deal with Honest, okay? Right, before I even got to the numbers, I already knew it was going to be great because I just saw the headlines and I'm like, what? Raising full year outlook. I saw achieved record revenue up 10%. First off, analysts were at, you know what analysts were expecting the company to grow revenues for this quarter? 3%. 3%. The company comes in with 10%. I was like, oh baby. Improved profitability with gross margin of 38%. A 1,120 basis point increase year over year. I call this management team and Carla specifically the magicians because I've never seen a turnaround happen this rapidly in a consumer goods company like this. This is incredible. They raised their full year 2024 revenue and adjusted EBITDA outlook. Phenomenal. Now, in terms of their income statement here, they went from $84 million in revenue to $93 million of revenue. Cost of revenue went down for the company. Down for the company. How do you increase your revenue that much and your cost of revenue goes down? Like that's, I'm telling you, this is stuff that almost never happens. Incredible. Went from $61 million cost of revenue down to $57 million. Gross profit exploded to $35 million from $22 million in the same quarter last year. Selling general administrative was a little trouble spot for the company. That was up about $1.4 million year over year. Marketing is spend. They are spending quite a bit more on marketing, about $1.3 million more on marketing there. Research and development, R&D, $1.7 million versus about $1.6 million same quarter last year. So total operating expenses went to $39.6 million from $36.2 million. Operating loss was $4 million versus over $13 million in the same quarter last year. And as far as basic and diluted EPS, 4-cent loss versus 14 cent. This is the highest grade I could give to a company that loses money on the bottom line. Like that's incredible. That's as good as it gets when it comes to a company that has a net loss on it, right? Now, company also ended the quarter with $37 million in cash and cash equivalents and $19 million increase from this point last year. The company has no debt on the balance sheet. Whew, that makes me sleep well at night. No debt and all that cash, let's freaking go. And this is a small market cap company, so 37 mil is a large number. As far as the outlook goes, they raised their outlook. So revenue, now they're talking about mid to high single digit percentage revenue growth. Before they were talking about low to mid single digit. So low to mid single digit, that's kind of like thinking like 2 to 7% range, right? And as far as adjusted EBITDA, now they're talking about 15 to 18 million. Before they were talking about positive low single digit to mid single digit range, so that's like a 2 to 7 million. So huge increase in adjusted EBITDA. Now, in terms of adjusted EBITDA, this is important to look at, right? Because you see the company has a net loss of $4 million. It's not really what it looks like. And here's why. They had stock-based compensation in the quarter of $8.9 million. Now, stock-based compensation, you dilute shareholder value a little bit, but that's a non-cash expense for the company. It's not like that's a cash expense where the money's got to come out of pocket. So if you're wondering how's this company's cash balance keep going up and they have no debt, right? These are the sorts of things that are very important to understand. Like, this is a non-cash expense when it comes to stock-based compensation, right? Also, CEO and founder and CCO transition expense, that was about $700,000. That's more of a one-off type expense. So their adjusted EBITDA was actually positive by about $7.5 million year over year versus a $4 million adjusted EBITDA loss in the same quarter last year. So the fundamentals of this company are increasing rapidly, okay? The management team has done, I mean, it's incredible. It's incredible how fast this management team has taken this company from like, it was like, man, they might be a bankruptcy candidate. The stock got all the way down to $1, right? And how fast they've switched things in a matter of like a year and a half. Like in a year and a half, like it's like a whole different company now at this point in time. It's a whole different company. And that's why I call them the magicians. It's incredible how fast they've turned the ship around. I mean, my gosh, it goes to show you the importance of a management team. A bad management team can completely ruin a company. A great management team can completely transform a company, and that's what we have going on. Now, the other thing you got to understand about this company is they're about to flip to net income every quarter, in my opinion. They're about to do it. And if you look here, like we can look at the overall 6-month trend, okay? So if you take a peek here, they had a net loss of about $32 million for a 6-month at this point last year. Now they brought that down to $5.4 million. So this company's on the verge of going to net income, and then they're going to become net income positive like every single quarter, unless there's some freak like one-time expense or something like that, which is very, very exciting, because then we're talking about the company's just going to start cash flowing bigger and bigger and bigger. And then what they do with that cash flow is up to them. Are they going to start to buy back shares, right? Let's say the stock's still in the single digits. Will they announce a big share buyback? Will they buy out other brands? Will they expand into more opportunities with their own business and continue to reinvest into R&D? There's a lot of things they can do with that money. Will they pay a dividend? I don't think they're going to do that. Will they just stack cash, right? Treasuries are still yielding a lot, so maybe stack cash and just, you know, because I could see how Honest could get to $50 million, if not $100 million plus in cash and cash equivalents very quickly here. And so when I think about the bottom line starting to flip over to that positive net income, right? And then once again, stock-based compensation, the only thing that's been hurting them really as far as their bottom line rate, that's a non-cash expense. So when I look at Honest here, this is about to become a cash flow machine as a company, which is very, very exciting because, like I said, like a year and a half ago, we never thought this was possible. I mean, absolutely incredible for this company. Now, additionally, what makes the stock so compelling here and why there's so much insane amount of upside, if you compare them to, you would have to compare this company to somebody like a Procter & Gamble, right? A Procter & Gamble is a very profitable company. Honest is just starting to, you know, flip over to that profitability side, right? So when I look at, you can't compare them as far as PE ratios or forward PE ratios or 2-year out forward PE ratios. You've got to compare them on a price to sales ratio, right? And as far as a price to sales ratio go, the trailing 12-month price to sales ratio, and if you look at forward price to sales ratio, I mean, Procter & Gamble's about 5x. 5x. So Honest has about 5x upside, which means $3 to $15, just getting to the price to sales ratio that Procter & Gamble's at here, okay? Now, keep in mind, Honest has way better growth than somebody like a Procter & Gamble. So technically, they should trade at a much richer price-to-sales ratio than somebody like a Procter & Gamble, right? And so what we're going to see here is a massive move up in the stock as a company gets more and more profitable, because then people are going to look at it and they're going to say, oh my gosh, look at the growth of this company. They're profitable now, and their price-to-sales ratio is so far beneath a peer like a Procter & Gamble overall, whose growth is very, very slow, right? Now, in my opinion, if this company stays on track, if Carla and the management team keep everything on track, the numbers just keep getting better and better and better. You see that revenue keep going up. You see the adjusted EBITDA keep going up. You see the net income start to be positive quarter in and quarter out, right? Which I think we should get to very soon here. And the company just becomes a cash flow machine, which I think they could become in a very short amount of time. I think we're going to $5 plus in the next few months. Not the next few years, in the next few months, we'll be in $5 plus, you'll see on this stock. And I do believe the stock will be $10 to $20 likely at some point in 2025. I think that's where the stock will kind of be range bound in 2025. $10 kind of at the low end, $20 kind of at the high end overall. You're going to see, in my opinion, a massive move up. Now, if the fundamentals got off track, if Carla and the team, like all this momentum they have going, it stopped and gross margins start going down and revenue started going down, then obviously these prices aren't going to happen. But as long as they keep what is going on, gross margins getting better, right? The bottom line getting better, the revenue getting better, this is what's going to happen in the next year and a half, in my opinion. Like, that's what we're going to see play out. And then from there, we'll see, right? 2026 and beyond, that really depends on where do they want to take Honest. Are they going to try to become a giant corporation, right? Or are they going to try to get a buyout, right? Because, you could sell off this company. Let's say at the end of 2025, going into 2026, the company's profitable every single quarter, right? They're bringing in, $50 million, $100 million plus in cash flow a year, right? And it just keeps building. The revenue keeps going up. They keep attracting more and more market share. Could be a very interesting acquisition target for maybe a Kimberly-Clark, maybe a Procter & Gamble, a lot of these other brands that, the growth rates aren't the best for those sorts of companies that are looking for that sort of growth opportunity, right? Remember, Carla used to work for Annie's. Annie's ended up being acquired by General Mills over time. Annie's used to be a company I owned back in the day that did a lot of business with Whole Foods. So, and then Carla's experience coming from Amazon. I don't know. We'll see what happens here. But what a change, man. I could not be a happier shareholder of this company. It's a miracle, man. I'll just be honest with you guys. It's a miracle. So that's stock number one. I mean, incredible upside here, and it's going to be a lot of fun. As long as they keep this going, it's going to be a lot of fun here over the next year and a half. Next stock up here, man, this stock maybe was even more troubled, but we've gotten past the hardest part now. And from here, it just gets better and better and better. And this stock is The Planet. The Planet's a 41-cent stock here today. There's big changes ongoing. Before I even get into the numbers came out after the bell. I'm going to show you the big changes that are going on really at the Las Vegas Superstore here. It's very important you understand what's going on there because they've made some major changes and it's completely changing how much traffic is coming to that location, okay? Now, this was a stock that used to be an under $1 stock. It went all the way up to $7 at the height of the hype cycle in like late 2020 into early 2021 with the stimulus and all that, right? And obviously today it's back to under $1 stock. Okay, so you understand this Las Vegas Superstore location, if you've never been, they've got a ton of room to expand inside that location. And they basically weren't utilizing a lot of the space. Well, that's changed, okay? So I went here, this is probably 2 weeks ago or so, I went to inside the actual store. I hadn't been in a long time. And I was blown away by what I saw. I was like, oh my gosh, like they've made major changes. So now they have a tattoo shop in there, right? That has all different pricing on tattoos, everything from like $10 to $400 tattoos, okay? And this place was busy when we went. I think this is like a Friday night or a Saturday night. We went that particular night, right? And a bunch of people, there was like 3 chairs, everybody's getting tattoos, a bunch of people waiting to get tattoos and whatnot. And that's one of those things you look at and it's like, are they going to make a ton of money off of a tattoo business? No. But the bottom line is this attracts a ton of foot traffic into the Planet, which is what it's all about. You want to get more and more foot traffic and have more and more things to sell people in your superstore, right? It's a Las Vegas Superstore, they call it. You got to do more than just have Jack Jackson for people to buy when they're there, right? They now have this club lounge open as well, in addition with the bar in the kind of like restaurant space as well, which is pretty exciting opportunity. So just another thing to drive traffic. They still have the same setup they've always had in terms of kind of their machinery and the brands and all those sorts of things, right? The Superstores is bigger than it's ever been. It's incredible the size of that Superstore. They could do so much volume out now at that store. I mean, literally, like, is basically like an unlimited amount of volume they can do there. Like there's nowhere you're going to find a Superstore that big when it comes to this particular space, right? Now, this is a really exciting opportunity here. Why are all these people in line here? So what this is a consumption lounge. So basically you go in there and you kind of get a menu like you would go into a restaurant or a bar or something like that, right? And you could order different products. Jack Jackson products, that is, okay? And you get to enjoy them in there. Now, when I first heard about this, I thought it was you were going to buy stuff at the Superstore and then you were going to go inside the consumption lounge and then use that product. No, that's not how it works. It's like more of a bar or restaurant type experience where you go in there and then you order this and that and this and that, right? And then you pay and then you leave eventually. So that's something that I've seen that twice now, and every time I go by there's always a line. It's always busy there. So that's very, very good to see. Now they have all this. They're supposed to open up this like exhibition, a Jack Jackson related exhibition, which I'm sure is going to drive a bunch more traffic. They're doing some sort of like filming of a show or something over here, but this is a ton more space that they can open up more and more stuff for, which is phenomenal for this company. And so that Las Vegas Superstore is going to get busier and busier and busier and be more and more of an attraction overall for a lot of different reasons. And then this is going to help the store sales in the end, right? Now, I was close to store last Thursday, okay? And I took this picture from overhead from the store. Check this out. Look at how busy it is. It is incredibly busy. I mean, the Ubers, the taxis, the parking lot. I mean, this is like, considering how bad the consumer's been hit the last few years, you wouldn't think the planet would be able to do business like this. Whew, they're doing business. They're attracting people again. Just yesterday, on Wednesday afternoon, I took this picture as well. On a Wednesday afternoon, you got to understand the strip is like the most dead, usually kind of like Monday, Tuesday, Wednesday, right? And then people start coming in again Thursday, Friday, Saturday, Sunday. That's like busy, busy times, especially for the type of people that would be going to the planet, right? And Monday, Tuesday, Wednesday, the only people that are there for the most part are more like convention type business, right? Thursday, Friday, Saturday, Sunday, that's the masses coming in, right? And that's planet. So this is on a Wednesday afternoon. I'm like, this is busy for the planet on a Wednesday afternoon? That looks pretty dang good to me. So there's fundamental changes going on for their big dog store, their Las Vegas Superstore, which is very, very good. Now, in regards to their revenues, this company came in at $31.1 million. That was up from $25.8 million in the same quarter last year. That was an increase of over 20%. And they said a month and a half of revenue from Florida helped, and then the Las Vegas Superstore helped, and then the Illinois store also helped. Gross profit increased to $15.8 million compared to $11.9 million in the same quarter last year. The improvement in gross margin was driven by lower cost of cultivation through full utilization of cultivation facilities and better yields, along with higher portion of sales from owned brands, right? Planet owns a bunch of their own brands, and the margins on that are pretty good, let's just call it, versus selling somebody else's product, right? Net loss for the company was a one trouble spot, came in at 8.1 mil versus 4 mil. Keep in mind SBC and some other things kind of went into that, right? Some other non-cash expenses. Adjusted EBITDA came in at 3.2 mil as compared with adjusted EBITDA at 2.8 mil. Adjusted EBITDA was higher due to better gross margin performance, strong cost controls, and increased operating leverage. So adjusted EBITDA actually up for the company year over year. Now, the other thing is I'm expecting this company's numbers next quarter to be really, really good, and then kind of moving in the future here. Cash came in at 26.7 mil versus 11.8 mil. Total assets came in at 242 mil versus 151 mil. Total liabilities came in at 84 mil versus 44 mil. So total liabilities was up about $40 million roughly year over year, while total assets was up about $90 million year over year. I will take that. I will gladly take that, okay? So now, I haven't been on the conference call yet. I'm going to listen to that likely tonight. My guess is the guidance is going to be really good, and my guess is the CEOs of the company are going to sound the most optimistic they've been in My guess is probably years, just to be quite frank. I think this will be the most optimistic the CEOs and the CFO have been in years. It's been a really downer market the last several years for this company and for anybody really in this space. And the reason was the consumer got hit, right? Las Vegas gave a lot of licenses to open up stores. A lot of those stores have faced a lot of troubles. It hurt margins in a massive way. And it was just a down spiraling cycle for the longest time, right? And that's over. Gross margins are starting to pick up now, and the business is trending better and better and better. And also, the planet's just executing on a higher level. So I'm expecting a really good conference call. We'll see what happens there. So the way I'll put it to you kind of like this. 2022 through 2023, the planet was kind of near the eye of the hurricane, man. It was violent. It was bad. They were getting absolutely wrecked. And it was an ugly situation. And we all know that. And that's why the stock trades under 50 cents today and under $1, right? And then the way I kind of view it is 2024, we're kind of on the outskirts of the hurricane now at this point in time. You can kind of see the sun a little bit, but you're kind of still being hit by a little bit of rain, but it's not that bad anymore, right? And the way I kind of view this in 2025 and beyond is the hurricane's long gone. It's sunny days ahead. And so really happy with execution. Now, where do I see upside in regards to Planet? Oh, gosh. I mean, it's impossible to really measure how much upside there is for the Planet, right? It's too early for this company to really say, like, it's $3, $7, $10, $20, $30, $50, $100. It's too early days. One, we don't know when this company flips back over to net income, which should be sooner rather than later. We don't know how much net income right now, right? Could be $10 million a quarter, could be $20 million a quarter, could be $50 million a quarter, could be $100. Like, we don't know where this company is going to range at as far as net income goes over time, right? Additionally, we don't know really how big the Florida opportunity is. The management team, when they talk about the Florida opportunity, they talk about this being like the biggest of the big opportunities, but you got to see the numbers, right? The Las Vegas Superstore looks like better than I've ever seen it by far and away. And so it looks like the Vegas Superstore numbers are going to come back insanely strong over this next couple of years, regardless of consumer environment, right? The Orange County store is still the Orange County store, and that's a whole mess. But the only good thing with the Orange County store is I feel like it can only get better. It can't get worse. The Illinois store sounds like it's off to a decent start here. And so the truth is, and we don't know what's going to happen with legislation. We don't know what's going to happen with the government in regards to this particular product, right? So it's really an unlimited upside story. I just know it's a lot higher than where we're at right now, right? But you can't really put a dollar amount on it because it's too early a days. It's way too early a days. So very, very exciting in regards to Planet. I hope everything continues to trend there. It's a small position for me, relative, right? But it is a position nonetheless. And I hope someday I'm able to look back and be like, wow, that one maybe thousands of % a gain. We'll see. We'll see. Time will tell, right? Now, next thing I want to talk about here is very important is, are you diversified? Because a lot of folks in the market, they're not very well diversified. So they might own 2 stocks, 3 stocks. That's fine if you have like $1,000 in the market or a couple thousand. But if you have more substantial amounts of money in the market, 30,000, 50,000, 100,000, whatever, right? You need to be diversified across 10, 15, 20 stocks. One of the things that gets me through the bear markets and out to the other side is diversification. I own growth stocks. I own value stocks, I own dividend stocks, right? And so certain time periods, no one wants to touch growth stocks. I also own spec stocks, right? That's a 4th category. And so when no one wants to own growth stocks, well, usually values and divs hold up pretty darn well, right? There's other time periods where no one wants a piece of value and dividend stocks, right? You could say a lot of that over the past kind of year and a half. A lot of value and dividend stocks have sucked. Just to put it quite frank, a lot of value and dividend stocks have sucked the worst the last year and a half to 2 years, right? Meanwhile, growth stocks, look at big tech. They're like the best, right, for the past, we can call it 2 years. It's been tremendous. If you own Meta and Nvidia and all these sorts of stocks the last couple of years, it's been phenomenal, right? If you own a lot of these value and dividend plays, if you own Nike and Starbucks the last 2 years, it sucked, right? Those stocks might be an opportunity now to be buying, right? It might have a tremendous next couple of years, but they weren't the plays the last couple of years, right? Spec stocks have their time to shine. Spec stocks have their time to shine when the Russell 2000 gets rolling and when the market just goes risk on in general. So if we're going to get into a dynamic where the Russell 2000 starts flying, right, stocks like Honest are going to perform tremendous in that. Stocks like the Planet are going to perform tremendous in that environment. Stocks like SoFi are going to perform tremendous in that environment, okay? So think about those type of stocks. A lot of these under $10 stocks right now are stocks that if we get into a real risk-on environment, if the Russell 2000 goes to the races, those stocks are going to fly, right? But being diversified keeps you through all these different markets and out to the other side, right? If you're too heavy in just one or two stocks, you're screwed if things don't quite go your way, and that's more what we call gambling activity. An investor stays diversified overall. Look at somebody like a Warren Buffett. Is Warren Buffett, just all in one business line? No, look at Warren Buffett. Look at how many companies his company owns, right? And then look at how many stocks his company owns. It's unbelievable. Think about Jeff Bezos and Amazon. Think about how many different businesses Amazon's in. Is Amazon just an e-commerce business? No, it's also a fulfillment company. It's also a transportation company, right? It's also a streaming company. It's also a membership model company. It's also the backbone of the internet company, the backbone of companies company, right? It's also a grocery store. Like you go through it and you're like, wow, that's a behemoth of so many different business lines. And so the same way these guys would think about running their businesses, right? Not just being all in. What if Jeff Bezos had just thought, I'm just going to be a bookstore forever, right? Do you think he would be on the top richest people in the world's list? No, of course not. What if Warren Buffett had just stayed in, back in the day when they bought Berkshire Hathaway, if I recall, it was actually a textile company. They were making like shirts and shorts and stuff like that. What if they had just stayed that? Like obviously Warren Buffett wouldn't be the rich man that he is today, right? And so this is a little food for thought in regards to you. Make sure you're staying diversified across your portfolio. Own 10, 20 stocks or so, right? And the bigger the portfolio, the more stocks you should likely own. The longer you've been investing, likely the more stock you should own as well, because you are going to hold stocks over years and years and years, right? And then you might want to start a new position in a company, so you naturally it just kind of goes up a little bit. So as far as me personally, I probably own 20 stocks, if not a little over 20 stocks, right? I got obviously a significant amount of money in the market, right? And so yeah, always keep that stuff in mind, and especially when you get onto more risk-on markets, because I think it's easy for a lot of people to say, I'll just own this stock or that stock, or I'm just going all in this stock. And it works for a little bit, and then it doesn't work, and then you end up absolutely screwed, right? And that's no fun, right? Stay diversified in the market, guys. It pays off in the end, right? There's so many great companies. If you think there's only one or two great stocks in the market that are going to do great over the next few years, you're not looking hard enough. There's so many companies. I know off the top of my head probably 20, 30, 40 stocks that are going to do tremendous over this next 5 years, including probably 10 stocks that I think are going to 5x or 10x over this next 5 years or so. So keep in mind, there's a lot of great opportunities in the market. Don't get stuck into just one opportunity. A lot of times people just kind of get blinded into just one stock or something like that. There's so much opportunity out here, folks. I've been actively buying recently like 10 different stocks because there's at least 10 different opportunities. I love the risk-reward profiles. Stay diversified overall, folks. Very, very important in this game, okay? Alrighty, if you didn't grab it already, make sure you go down the pinned comment down there. Grab that 7 things to do when stocks are crashing workshop there. That's going to help you out tremendously, okay? Alrighty, guys, much love as always, and have a great day.